All right, let's talk about Tesla because something really strange is happening. You've got a company that is hitting unbelievable new highs, while at the same time, its core business is showing signs that it's starting to fall apart. So, how on earth is that possible? Let's get into it. Okay, check this out. In the very same week, Tesla stock blew past its all-time high, just soaring. But on the other side of the world, in a key market like Sweden, their actual car sales, well, they absolutely cratered, down by a whopping 89%. This isn't two different trends. This is happening right now, at the same time. What is going on here? So you gotta ask yourself, what are the Wall Street investors seeing that the sales reports aren't showing? I mean, how can a company be flying and failing all at once? The answer, it turns out, has very little to do with what Tesla is today and everything to do with what some people are betting it's going to be tomorrow. To understand that sky-high stock price, we've got to go to Austin, Texas. Something just happened there that points to a total shift in what Tesla even is. We're talking about a pivot from being just a car company to becoming something else entirely. So here's the big news. On December 14th, Tesla confirmed something that's kind of mind-blowing. Its cars are now driving around Austin with nobody inside. No safety driver, no backup, just an empty car navigating public streets. And get this, these aren't some special one-off vehicles. They're standard Model Ys, and they're doing this across a huge 171 square mile area. This is step one for a real-deal commercial robotaxi network. Now, to see why this is a potential game changer, you have to look at the money, the margins. Right now, Tesla makes cars, and its gross margin, that's the profit it makes on each car before other expenses, is about 18%. And you know what? For the auto industry, that's really, really good. And this is the key, a robotaxi network isn't a car business. It's a software business. It's a service. And the potential profit margin on that, it's not 18%. It's closer to 80%. Yeah, 80. That single leap is what could completely rewrite the company's entire financial future. That right there is the trillion-dollar idea in a nutshell. And Wall Street is absolutely seeing this. Analysts at Wedbush are calling this unmanned testing a golden path to launching this whole thing for real in 2026. This is why they have these incredibly high price targets. In their models, they're not valuing a car company anymore. They're valuing an AI and robotics company. Okay, so that's the dream. It's a pretty powerful one, right? But now we have to snap back to reality, back to the present day. Because if you look at the car business, the thing that's supposed to pay for this whole AI dream, you start to see some pretty major cracks in the foundation. And the reality is, well, it's not looking great. Over in Europe, new car sales have just fallen off a cliff. I mean, the numbers from this past October are just staggering. In Sweden, an 89% drop compared to last year. In Denmark, down 86%. This isn't a little dip, folks. It's a collapse. And this isn't because the whole market is just sinking. Nope. This is about competition. Chinese EV brands are coming in hot, and they are gaining ground fast. Just look at Spain. In October, Tesla sold under 400 cars. Meanwhile, the Chinese-owned MG brand sold over 3,700. The lead that Tesla used to have, well, it's shrinking. Okay, so maybe that's just a Europe thing, right? Well, not exactly. Right here in the US, the story isn't much better. Even after launching a cheaper model to try and boost sales, November deliveries still fell 23% from last year. We are talking a nearly 4-year low. This is starting to look less like a blip and more like a real problem with demand. So now you have these two totally different stories, the bright AI future and the shaky car selling present. And they are on a direct collision course with regulators in California, which just happens to be Tesla's biggest market in the US. So the California DMV has basically put Tesla on notice. They're saying that the names autopilot and full self-driving are, and I quote, deceptive. A judge even suggested suspending Tesla's license to sell and make cars for 30 days. Now that's been put on hold, but the DMV has given Tesla a 90-day ultimatum. Their choice is pretty stark. Either rebrand the tech that is at the heart of their image or somehow prove it's way more capable than regulators think it is. So what's this really all about? It comes down to these official industry standards, the SA autonomy levels. Think of it like a rating system. Tesla's tech is at level 2, which is basically a really, really smart driver assist. You still have to pay attention. But the DMV's point is that level 3, 4, and 5 is where the car can actually drive itself without you. So their argument is simple. The name on the box doesn't match what's inside.
Okay, so this brings us right back to that massive stock price. It's all a huge, high-stakes bet. Investors are gambling that the robotaxi future will get here before the current car business runs out of gas, or before regulators put up a roadblock.
And if you want to see just how big that bet is, look at this number. This is the forward PE ratio. It's basically a measure of how much hype is baked into a stock price. A traditional car company might trade at a ratio of, say, 6 or 7. Tesla is trading at over 275. That is a number that is completely disconnected from the car industry. That's a number that is pricing in, well, perfection. And this quote from a research note just nails it. The stock is priced for perfection. What that means is there is zero room for error. Any hiccup, any delay, any bad news could have a huge impact. And all of this is happening while the business that's actually making money today is showing, as they put it, structural deterioration. Ouch. So you have these two completely different realities battling it out. You have the bull case. Tesla is a revolutionary AI company about to change the world. Then you have the bear case. Tesla is a car company with an aging product line, falling sales, and regulators breathing down its neck. And right in the middle, the ultimate insider, CEO Elon Musk, has bought nearly $1 billion of stock himself recently. That's a pretty strong signal of which reality he believes in. And that leaves us with the final trillion-dollar question. The promise of that AI future is massive. It's incredibly compelling. But the problems in the here and now are undeniable, and they seem to be getting worse. And with that 90-day regulatory clock ticking down in California, we're all about to find out which of these realities is going to win out.